Hello everyone, my name is Moji, and you're watching Bitcoin Bubble News Channel. I can say it in one sentence, this is the biggest deflationary nuclear bomb we've ever been given, and people still don't get it. It looks like they're still fighting about, say, inflation in the 1970s. I mean, are you kidding me? You have no idea what's going to happen. I just think about how much gold is worth in terms of entire amounts of money. Gold is worth about $15 to $20 trillion. You already know all the other numbers, so Bitcoin could be worth $10 trillion. It's 1.5 to 2 today, I think. And it was so easy for me to get to 3 to 5 million. I believe this is a chance because the space is worth 2.5 trillion today. Like other types of assets, I think it will reach $100 trillion. That was the biggest deal ever, and it made more money than any other event in history. That's the deal. How would you like to cut that up? You can slice and dice it however you like. How much danger you're willing to take. But that's the trade Raoul Pal starts by talking about the idea of financial repression and how it happens every 4 years. The election cycle, the crypto cycle, and other important business events all happen at the same time. He makes it clear that this cycle is what drives asset prices and how the market acts as a whole. Now is the time when states and central banks have to refinance a huge $10 trillion in debt. Because there isn't enough GDP growth to pay these debts, the economy usually gets extra cash at the same time as the refinancing process. Pal points out that all investments become highly correlated during these cycles, but cryptocurrencies always do better than the others. This is because of the long-term adoption curve of digital assets, along with the fact that the economy goes through cycles and debasement of currencies acting as an economic tailwind. As we get closer to an election year, governments are likely to spend more and make more money available. This will cause asset prices to rise even more, especially in the crypto area. This video has been liked, subscribed to, and post alerts have been turned on. Please take a moment to do these things. You can also watch our other videos about cryptocurrencies and digital assets in general. Please share your thoughts and comments in the part below. For the channel's growth, everything you do is very helpful for the YouTube system. Thanks and have fun with the movie. So there is financial control, but it only lasts for 4 years at a time. The US election cycle, which lasts for 4 years, is the coin cycle. It's all the same. That means it doesn't matter what you call it. But there is a cycle going on, and we're just now entering it. We now have $10 trillion in debt that needs to be refinanced. You need to make the interest payments again. In most cases, they add enough cash to the system to cover this cost since GDP growth isn't high enough to cover it all. Now we move on to the next stage. That's what all assets are really driven by right now. Basically, everything is linked. That being said, there is one asset that does much better because it has both the secular acceptance curve and the macro tailwind of currency debasement and the cycle. That asset is crypto. That's where we are in the cycle right now. Since it's election year, they start giving money out after the election. More work needs to be done on them as well. This means that the end of an election year is usually a very good time. The year after that is usually also very, very strong. But this is a problem all over the world. All of the world's big central banks are refinancing their debts at the same time. This includes those in China, Japan, Europe, and Canada. In these feedback loops, you always want to find the weaker link because that person is most likely to need the most help. This time, China is most likely it. Just now I turned on the tapes. Felix may have just sent it out via Twitter. Some time ago I talked about a story in Bloomberg that said the US and China had agreed to help each other. I can say it in one sentence, this is the biggest negative nuclear bomb we've ever been given. And not many people get it yet. They are still fighting about, say, long-term inflation from the 1970s. I mean, are you kidding me? You have no idea what's going to happen. There is a lot of height gain. I think 10x from now on, and Bitcoin does. Like 5x or 4x from here. That's what a bull market is like. Plus, there's always the first race, which is the early stages when you don't have any proven network effects. That's the big thing I'm starting to think about. In fact, that bet is a good one. That bet was the Solana bet of the last cycle and the ETH bet of the cycle before that. The whole thing isn't on it though. I'm beginning to think about that since I don't trade or do anything else. I'm just sitting here with my work. I'm giving that some thought. Because I believe a great move is about to happen. It's fun, but it goes by very quickly. And after it goes up too high, it normally goes down 95%. But this cycle way of thinking takes over. Now please lower the stakes a bit, remove some lifestyle chips from the table, and do something. This trade isn't just a circle though, and you think you'll sell when prices are high and buy when prices are low. Not so fast. You're not going to. I'm just thinking about how much gold is worth in terms of all the dollars in the world. We already know all the other numbers, so Bitcoin could be worth $10 trillion. Today I think it's between 1.1 and 3.2 million, but it could easily reach 3.5 to 5 million, which is about where I thought it made sense. Do a lot more than that, of course. But I like to know where I'm going and have a plan. And in the past, ignoring a goal has not worked out well for me. In a broad sense, I mean that Robo did buy Bitcoin at $200. Okay, he sold it for $2,000. Then it went up to $18,000. After that, he probably planned to kill himself. But he had a chance to come back at $3,000, $4,000, $5,000, $6,000, and $7,000. He also had a chance to come back in. I don't mind what I missed, though. I never thought about what I was missing. That's not the right way to do it. How I really see it, the chance is that the space is worth $2 trillion to $2.5 trillion right now. Like other types of assets, I think it will reach $100 trillion. Yes, that was the biggest trade ever and the biggest source of wealth in the history of the world. That's the deal. How would you like to cut that up? You can slice and dice it however you like, how much danger you're willing to take, but that's the trade. I thought Bitcoin was worth $1 million when I worked on it for the first time in 2013. Yes, I don't think that's crazy wrong either. Yes, the space is pretty close to my goal of $1.5 billion if Bitcoin is at $1 million. This could be 100 trillion or 50 trillion. It doesn't matter. It's really huge. How should the money be split up at this point in the cycle? Like Dan said, it's a good amount of coin. I see a lot of family offices that start at about 1% and end up at 20% over time. So I believe 10% or more is a good number. You should put a lot of money into technology because it's in a long-term bull market. You might finally be able to buy bonds and make some money that way. That's true, but I still believe in gold and am very interested in it, no matter what I do with bonds. And I think that gold will go up to 3,000 if this move happens, say, in the next 10 years. That's why I use gold instead. It makes sense. Or wherever you want to put your cash or set income. That's less, though. Then I believe you need a big piece of NASDAQ. The steps are very simple. You can get your money back for technology. Since 2011, the NASDAQ has given investors a 17% gain every year. That's really big. The SP does 8%. To be clear, Bitcoin is now at 147%. It's a totally different game. I would be growth-oriented and all in on danger, though. It should be that way. It's interesting that Dan brought up this point because these big family offices are not at all like that. They're very afraid of taking risks, like you know that these guys are going to end the loop over their ski tips long again, which is something Dan also talks about. Yes, of course. It works that way all the time, right? They're still not there. Pal says that investing in technology and venture assets is just as important as investing in standard assets like stocks and bonds. A big change is coming, he thinks, as crypto companies start to go public and tokenize their stock. As businesses move from their early stages to more stable core assets, buyers have a one-of-a-kind chance to make money. Pal talks about Solana as an example of an asset that is changing from a speculative effort to a more stable place in the crypto ecosystem. He also says that the fact that crypto markets don't have a lot of extra liquidity makes it possible for smart investors, especially hedge funds, to take advantage of price drops in tokens that aren't worth as much. You need to have at least 10% of your assets in blockchain